Hello traders, Gary Wagner here. It's 11:09 in Honolulu, 5:09 in New York on Wednesday, 27th day of April 2022, and this is the daily report for gold and silver. Gold prices continue to plunge to lower value, with today's decline resulting in a loss of $17.50, almost a full percentage point, with the most active June contract currently fixed at $1,886.60. Today's decline was the combination of selling pressure, that was about a third of the underlying force, and dollar strength, about two-thirds of the force behind today's decline in gold. The dollar gained 0.63%, while gold lost 0.92%, and that is how I am making that evaluation. Silver also declined today, approximately the same percentage drawdown as gold. Gold 0.92%, silver down 0.95%. Silver futures are currently at $23.32. This first chart is our daily chart of gold futures. We can see that the close corresponds with where we are looking at as a potential area for support to come in, with major support, we believe, still occurring at $1,873.90. That is based upon the 100-day moving average. That being said, we were considering initiating a long position at between 1880 and 1885. Today's low came in at 1881.60. It is, however, how gold traded intraday in New York throughout the trading session, making that low on three multiple occasions, which didn't give us the conviction that we will not see a further decline. So we did not send out any trade alert and remain flat with no active trades. We do have some very important reports coming out in the upcoming days, and of course, the Federal Reserve meeting next week. While it is highly anticipated that we will see a series of 0.5% rate hikes over the May and June FOMC meetings, which has been the primary underlying force that has taken the dollar value higher and pressured gold, we are still awaiting to see reports on first quarter GDP that will be released tomorrow. Our opening letter contains the most recent estimate by the Atlanta Federal Reserve. It's expected to show a tremendous contraction. When we view that and then analyze it against GDP of fourth quarter 2021, which came in extremely robust, as well as Friday's report on the most latest figures of the PCE inflation index, which of course is the preferred index by the Federal Reserve. With all of that happening, we want to wait a little bit. We've got good profit year to date. We would rather err on the side of caution than move into our next position prematurely with more potential downside possible. Lastly, I want to point out two other factors which held us back from initiating a long trade today. The first is yesterday's discussion on a candlestick pattern we identified. It is the weakest of bullish reversal patterns when we look at Japanese candlestick patterns, and that is the bullish harami. While it met all the criteria for the specific two-day pattern, it requires confirmation, which means that we would have had to see today's candle be a green candle with a higher low and a higher high than yesterday's, and hopefully that high would come somewhere near the high of 2 days ago. That, of course, did not occur. The second thing is when we look at the basic fib retracement set I have up, which begins at $1,780 up to this high at $2,078, we barreled through a important fib level, which is the 61.8% retracement level. That occurs at 1893, and we closed well below it. As I said, we are currently at 1886.60. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.